What's going on in the market? What's gonna happen in the market? Is this a good time to buy? Should I wait to buy? And so on. So we hope to answer some of those questions in this video. Hi guys, Oleg Tkach here with NFM Lending, and today we're gonna be covering interest rates. We're going to be covering the prediction of what's going to happen in the future with rates. We're going to talk about housing. We're going to talk about housing trends. We're going to also cover some previous videos that we have done where we go into what the interest rate and housing predictions are and what ended up actually happening, in addition to what's projected to happen in the future. For most of you guys, we've worked together. I've been your loan officer that helped you close your loan. For some of you guys, this is the first time. I've been a loan officer since 2005. I run a pretty big team. We help hundreds and hundreds and hundreds of families each year buy their first home, upgrade their home, pull cash out of their homes. That's what we do. The most common question that we get asked as mortgage and real estate professionals is what's going on in the market? What's gonna happen in the market? Is this a good time to buy? Should I wait to buy? And so on. So let's jump into interest rates. Now, last year, when we did our market prediction video, it came out pretty much May of 2022. And at that time, rates were right around 5%. Now, let's see what happened after that video. So if you look here, you will see that when we did this recording, we had mentioned that the prediction is that rates are going to go up 1 to 1.5% by the end of the year. And so if you look at it, from May on, rates continued to go up through June, came down a little bit to the mid-5s in July, and then spiked up in September, October, up into the middle 6 range, even touched 7s right before November, and then leveled off in the mid-6s. And they've essentially been in the mid-6s up until about a week ago when they are starting to touch the 7s again. So that is essentially what we were predicting was going to happen. It almost fell right in line with it. They actually went up just a little bit higher than what we thought that they were going to come in at. But nonetheless, the fact of the matter is that rates really followed suit. Now, the main driver behind rates going up, if you guys remember the last video, was inflation. And we talked about how the Fed's #1 mission is to fight inflation. So what has happened since then? Well, if you look at inflation year over year, the Fed, by raising rates, has essentially been making progress with inflation. Inflation has been coming down and coming down and coming down, and almost has been coming down monthly up until this week when we had our first report that inflation ticked up just a little bit from June to July. And so that trend of coming down, we just saw that little uptick. So what does that mean for rates? Well, if we look at the future, and when I say the future, the next 6 months, 12 months, year and a half, the current projection of what's going to happen next is that rates are going to stay or go above this level. Most likely, we're going to see them probably kind of average between the 7 to the 7.5 range. We might see them tick up into the 8s, but most likely it's going to be in the 7.5 range, and maybe high 6s on a good day. Now, that's going to happen between now and the end of the year, and most likely kind of flow through into the spring. Now, with that said, what's the prediction for next summer? This is where it gets interesting. Rates are expected to come down middle to the end of next year. Couple different reasons. One is Fed's inflation fight is working. 2, it's an election year. And anytime we have an election year, historically, even though people say that this has nothing to do with it, but ever since I've been in the business, since 2005, every single election year, rates have come down. Why? Because the current administration obviously wants to get reelected. So typically around the summertime in an election year, rates start coming down. I think the fact that we have the Fed, everything is working with inflation, the fact that we have an election year, summer of next year, we're gonna see rates tick back down. Now, how much are gonna tick down, go back down to? My guess, my prediction, they're gonna be in the 5s. High 5s, low 5s, we don't know, but most likely into the 5s is where they're going. Now, let's go past that. Let's go into 2025, which sounds really far away. Prediction is that they're gonna continue coming down past then. And currently, based on all the data that we know, we might see the mid-4s or possibly even lower in 2025. Now let's talk about the housing market. In our last video, we had mentioned that rates are going to tick up, which means that we're going to most likely see a softening in the market with prices. Now, let me remind you, last year in May was basically when we were just at a stage where between February and May, we saw the hottest housing market we've ever seen from a standpoint of prices going up. I mean, there's people that were bidding $1 million over ask. A couple homes went over $1 million. The first one was in Bellevue, then one went over $1 million in Redmond, and a few others. Nonetheless, the point is, people were all bidding $100,000, $200,000. That was normal back then. Why? Because everybody was trying to get in before rates went up. And because of that, we saw one of the hottest housing markets we've ever seen. It was the worst time to be a buyer. Now, what happened after that? In our rate video, we talked about how with rates going up, the market is going to soften, that things will come down a bit. And if you look at the housing market in end of 2022, we did see rates or house prices come down a bit. It was exactly as predicted. But when we talked about this year, 2023, and is it going to come down further, we talked about the demand of housing and that it was like 14 million people out there needed to buy a home. And because of that, the demand ratio with how much people want to buy or need to buy versus how many homes were on the market, well, let's just take a look at the numbers, because we predicted that even though housing would come down, it wouldn't really necessarily crash. And that was the big part of last year's video. All right, so if you look at housing and us predicting that home prices were really not going to go down much further this year, if you look at this report here, home prices actually year over year after the craziness got over are up about 3%. Now, 3% isn't much, but the fact is we didn't see that market crash that a lot of people were predicting. Now, why is that the case? It's because, and we talked about this, only 1% of homes in the last year changed hands. Why? Because if you're a seller, let's just think about this for a second. If you're a seller, why would you sell your home if you have a 2.5% rate, right? If you have a 2.5% rate, all of a sudden, if you're looking to upgrade, you kind of put that on hold. If you're thinking about really changing your home, you're really considering, do I like the home enough to lose my rate? When it comes to home prices and prices in general, just basic economics 101, it all has to do with supply and demand. As the demand for housing dropped because rates went up, which it did drop, the fact of the matter is, even though 14 million Americans needed to buy a home, in theory, the demand dropped for a couple different reasons. One, they couldn't qualify. Two, the payment was just too high, so the demand did drop. But as the demand dropped, housing supply dropped as well. And that is why you saw home prices essentially resilient to basically close to 7% rates, which if the home inventory stayed just as high as it normally was, we probably would have seen more of you could call it a price correction, price drop, not a pure-on crash, but more of a price correction. So let's look at some charts. So let's look at this one. You have new listings of homes down 25% year over year. So if you look at this and you look at overall the normal, you could say spring market, this is showing 2020, 2021, 2022. You see all these are pretty much aligned where you have this normal amount of listings that are hitting the market. Now look at 2022. You have way less homes going on the market than you typically do. And that is just showing that the demand, the amount of people selling their homes is dramatically lower. Now, with that said, here's another chart to take into consideration. 37% of homes sold above list price. So, again, a lot of people that are saying the bad time, housing market's going to crash, we still have 37% of homes sell above list. Okay? Now, in addition to that, only 5.6 had price drops. Now, most of the ones that had price drops, if you actually look at them, they were extremely overpriced. That is why they had price drops. You're in any type of market, you're going to have the sellers that are going to list so high that it's just unreal. And you're going to see that in every market, and most of the price drops that happened was on those homes. Here's another interesting chart to consider. Home buyer demand up 11% year over year. If home buyer demand, if you think about this, if home buyer demand is up 11% year over year, but listings are down, what does that mean to supply and demand? You have more demand, you have less supply, which in turn still is going to just help hold real estate prices more firm, more steady, and so forth. Now, the last chart that I want to cover is the median sales price. And keep in mind, guys, this is across the whole country. This has nothing to do with just a particular market. This is the national average. And I understand some markets have been up more, some have been down more, but overall national average, if you look here and you look at 2022, and you look at the fact that 2022 we saw home prices, pretty much before July come up to the highest point they were ever at, and then after that, the second half of the year softened a bit. Now, guys, this is 375 to 350. We're not talking about 30-40% drop here. We're talking about between 5 and maybe 10% depending on the market. So the average came back down. Now, this is December, which rolls into 2023. If you look at 2023, we started off a little bit lower, and it went back up to where we're right here now in basically past July, where home prices are almost where they were exactly last July of last year, which means year over year we're almost identical in price. So what happens next with housing and house prices? Knowing what we know, knowing how resilient home prices have been, are we going to experience that crazy crash that a lot of people are saying that's going to happen? Well, take this into consideration. We have an all-time low in homes that are listed. We also, though, right now have an all-time high in mortgage rates, something we haven't seen before. So regardless what happens, purchasing power, how much somebody could buy, continues to go down based on the fact that rates continue to go up. As rates go up, buying power goes down. People buy payment more than they buy rate. With that said, though, again, you have low inventory. Next year, remember how we talked about how rates are supposed to come down into the mid-5s? Imagine this. You have all these buyers waiting to buy, waiting for a good time to buy, sick of paying rent. Because really that's the alternative. Either way, no matter how you spend it, you're paying somebody's mortgage. If you have all these people that are waiting to buy and rates do come down, again, everything's a prediction, but let's say they do come down to the mid-5s and all these buyers come in and now demand spikes up, even though inventory in theory would go up as well as people are, there was a study done that said if rates go down to the 5s, I will upgrade my home, right? Well, that seller now became a buyer. So now you, even though you have more inventory, you at the same time too are adding to the buyer side. So all these buyers come in the market ready to buy. We might see another early, just like what we saw in early 2022, massive bidding war and just 17 offers in each home, waive everything, all that. We might see that again. So why are people still buying today, and what's the opportunity? Well, everybody that's buying today is planning on refinancing when rates drop, meaning these payments are temporary. That is the mindset of the buyer today. I'm going to get in, I'm going to get the best deal I possibly can, especially in the fall. Like most, if you remember the charts, most prices come down in the fall. I'm going to get in, I'm going to lock myself into the best possible price that I can. I'm going to ask the seller to pay for as much as I can. I'm going to get the best deal I can. And then when rates drop, instead of being one of the people that goes out there and has to compete with 17, 20, 30 different offers, I'm just going to refinance. And that's the mentality that the buyers that are buying today are having. So the overall rate prediction or the market prediction is, sure, prices will probably soften a bit like they historically do in the fall. However, next spring, we might see just a wild buyer frenzy, unless of course, kind of the big part that no one really knows of is if we don't get a soft landing and we go into a full crazy blown recession where jobs are, horrible, where people are getting laid off left and right, which so far, with everything that the Fed has done, the one thing that has been super strong has been the job market. The job market continues to be strong. So even though that is a possibility, and that's always a possibility, the likelihood of that happening is definitely way lower than the likelihood of rates coming down and the market just taking off and home prices going and following with that. So there you have it. That is your market update, rate update, housing update, and future predictions. Again, for those of you guys that are watching that are my clients, we thank you for your loyalty, for your business. We've helped a ton of our buyers recently buy homes out of state. That is definitely one of the biggest trends, is buying a vacation rental, Airbnb out of state, buying rental properties out of state. I think the one thing that has really changed since COVID is it's like almost the state lines have been gone and investors are investing where it makes sense, not just in their local market. So for those of you guys that we've worked with in the past, we thank you for your business. We look forward to working with you in the future. For those of you that haven't, we'd love the opportunity to work with you. We thank all of our past clients for referring their friends and family, and we'll keep you updated every single year, essentially moving forward on the housing market predictions. We're here for you guys. We love you guys, and we hope you have a great rest of your day.